ADNOC, Abu Dhabi's big energy giant, is going to sell and list a 15% stake in its logistics and shipping unit. How fortunate that an energy expert has just walked through our door. We have Matt Stanley of Kpler in the hot seat this morning. Morning, Matt.
Morning, guys. Morning.
Right. Forget the plan that we had for this morning. Let's talk ships and logistics. Why is ADNOC doing this?
Look, 20 minutes ago, let me get my brain in gear. It's all about leverage. It's all about infrastructure and having the supply chain. ADNOC, have a great setup. The logistics arm. I mean, look, if you're moving a cargo from A to B, the biggest ancillary cost is logistics. Is putting it on a boat and moving it from A to B. So to leverage that side of their business makes perfect sense for them. And why not? The Middle East is a growing economy when it's coming to oil trading, and ADNOC could take advantage.
How much interest do you think there's going to be in this IPO?
A lot. I mean, if you're putting your money into raw assets, to fossil fuels, a lot of the world is shunning away from it. But here in the Middle East, we have a balanced view. It's COP28. His Excellency Sultan Al Jaber, Dr. Sultan Al Jaber, he's leading COP28 at the end of the year. It's a balanced argument that he had. His speech he made last week, which was welcomed by across the world. It goes hand in hand with the fossil fuel argument as well. So, it makes sense. Makes perfect sense.
Because it's been quite the year for earnings, hasn't it, for energy companies?
Yeah, not been bad. I mean, the dividends that Aramco announced yesterday were extraordinary. I mean, I would argue that the future of oil trading is in the Middle East. I mean, the historical, super majors, your Shells, your Totals, BPs, had great years as well. Compare that to your Aramcos and your ADNOCs, they pale into somewhat insignificance. And these guys are only just getting started.
Now, I'm assuming when you say that you and I have read the same Bloomberg story that came out a couple of days ago about the amount of commodities traders that were moving from London to the UAE.
Yeah.
Are you seeing your mates come over here?
Everyone's here. I'm actually seeing the opposite now, where people are telling people not to come, because I know a guy who runs a very, very big company, and I won't name names, of course, but everyone within his group wants to move from Singapore or the States or London into Dubai, because they see it as a balanced place in terms of geography, where they can trade, on time zones, a good lifestyle, low tax environment. You can't bring everyone here. So I actually think that we're at a point now where it may plateau, but the world wants to be here, and it is the next commodity trading hub. It's bigger now than Geneva. I was in Geneva not long ago. Certainly bigger than Paris now. I'm in Singapore in a couple of weeks, and I'll be interested to see what the demographic looks like there. But Dubai is calling.
Well, let's look at the Saudi Aramco numbers that you alluded to a little while ago. Rich's theory is that every story has to be either good news or bad news. It has to be an up story or a down story. Saudi Aramco seeing its profits drop year on year, but still making a good $32 billion. Is it good news or bad news?
Look, I'm an Arsenal fan. We're now second instead of first. That's still a good news story, right? Aramco dropping 20% since last year. Oil prices, or if you take diesel, using diesel in the prism, what we're talking about here, diesel prices are half what they were this time last year. That obviously reflects on Saudi Aramco's bottom line. To only drop 20% in terms of profits year on year, quarter on quarter, quarter versus last year, is an amazing achievement. And the guys, they can't hire quick enough, and it's a great news story for the region, and others are following. It's only a good thing. There's not a bad slant you can put on that story.
It's been a rough couple of weeks for oil, though. We had WTI below 70 at one point. We've got Brent below 77 at the moment. What's the market worried about? I would argue that
the second half story, where everyone was like, "Oh, it's going to be Butte and it's going to be $110, $120 a barrel." We're middle of May now. People are starting to buy for second half. The July, August trading cycle has started. China have disappointed. I think a lot of people will revise their forecast in the next couple of weeks. I would say 80 to 90 is probably a very good range if you're an OPEC member. There is an argument to be said that, prices have come off 10% since the start of the year. OPEC saw this in advance and pulled out their trump card. and anticipate what was going to happen vis-a-vis demand. So I think that forecasts will get revised, and it's a fair price for Brent right now, about $76, $77 a barrel.
80 to 90, you say, a good range for OPEC. Is it a good range for the OPEC economies, though?
It depends how much they have promised to invest on the back of it. Look, the group since COVID has done a great job, has balanced markets, balanced expectations, financial flows, managed money, has moved out to other assets. Gold is above 2,000, has been for a long time. Crypto, I don't really care about crypto, but commodities has been fairly stable. It's been fairly steady. Okay, it's dropped. Brent has dropped below, perilously close to dropping below 70. But it's been good. People can plan. Demand is good. You had Paul here in his seat this time yesterday. I'm honoured. Demand is there. Is it coming in from places that people thought it would, like China? Domestic demand is good in China, but international flows are not there yet. I think it won't come until really Q1 next year.
The UAE Energy Minister, Mr. Al-Mazroui, said yesterday that short-term things were fine. He was worried longer term as to whether investment, and you mentioned investment there, would keep up with demand. Fantastic question to ask someone sitting in a Dubai radio studio. Is he right?
Wow, thanks, Brandy. He alluded to the fact that OPEC will do what they have to do based on market dynamics at any point in time. That is the right answer. He is spot on about forward investment long term. There is nothing really coming in apart from the Middle East. Look at the refining sector globally. It is an ageing sector in Europe. It is not one in the Middle East. There's a new refinery opening in Kuwait, new one opening in Dubai, in Oman, and a new one in Saudi Arabia opened last year. It's not even, you can't even get the investment in Europe. So the Middle East are willing to put the money, down for the forward fossil fuels investment. Europe are not. And it is a Europe story.
Well, speaking of Europe, we've got that in-person OPEC meeting in Vienna next month. What will the members be watching for between now and then?
I think it's all about what demand has looked like for Q2 so far. Q1 was pretty good, was pretty stable. Q2, we're not sure yet. Paul alluded yesterday, Q1 was very good. March was very good. He did mention about April, maybe a bit early, but I think that people will look, the back-end data for what April and May is looking like in terms of demand in order to make a decision. I don't think there'll be any movement from OPEC, to be honest.
Same. You said that 80 to 90 was a good price for OPEC. What's your outlook, though? Where do you think that we're going?
Well, we're in discussions right now. We're talking about it, looking to revise something. But look, it's very much maintaining course. It's all about the wider economic macro sentiment, what's out there. Interest rates, what happens there? Is there a pivot point in Q3? But yeah, look, it's pretty much status quo right now.
Matt Stanley from the energy data firm Kpler, thank you very much for your time this morning.
And finally, Matt, you're an Arsenal fan. You mentioned it earlier. Are they going to catch Man City, or is it City's title?
Not a chance. It is Man City's title, and I'm happy being second.
Thank you.
That's bullish me.
Coming up in just a moment, we are going to be speaking numbers again. We've got the healthcare earnings out from Bajil Holding, company that listed in October last year. They have seen their net profits rise by around 85%. They're going to open 5 new medical centres. That's going to increase their footprint by 20%. We are going to be speaking to the CEO in this studio to find out how being a listed company has affected them in terms of culture and day-to-day operations, and to find out what we can learn from those numbers in terms of what's happening to the population here in the UAE.
Dubai Eye 103.8.
Join the conversation.